Hello students, hope you all are doing well. Again, I welcome you all in my second lecture, Financial Decision. Students, I am glad to see such a great response from your side. Thank you all and keep watching my videos and please don't forget to subscribe it and press the bell icon button so that you may get the notification for upcoming videos. So let's start with today's topic, that is your financial decision. Financial decision refers to the decision concerning financial matter of the business concern, decision regarding the magnitude of the funds to be invested, kind of assets to be acquired, and pattern of distribution of the firm income and other similar matters. And these decisions are broadly categorized as the investment decision, financing decision and dividend decision. Right? So let's start with your first investment decision. As we all know that the firm have a scarce resources that must be allocated among competitive uses. The financial management provide a framework for the firm to take these decisions wisely. So investment decision is related to the determination of total amount of assets held by the firm, right? And these assets are fixed assets and your current assets, right? It is one of the most important financial decisions since the fund involve cost and are available in a limited quantity. Its proper utilization is very necessary to achieve the goal of a wealth maximization. Second is, the decisions are related to the assets composition of the firm in which the firm will invest, right? Which is further classified under two groups, that is your long-term decision and your short-term decision. Long-term decision referred as your capital budgeting decision and short-term decision is referred as your working capital decision. The investment decision is important not only for setting up of a new unit but also for the expansion of the present units or the replacement of the permanent assets, right? Fixed assets of a firm are the primary factor which determine the profitability of the firm, and the earning of the firm is basically caused by the fixed assets composition. So your capital budgeting decision are the crucial for any firm in which you evaluate the different alternative with the risk and return. Next we have your short-term decision. It relates to the allocation of the fund among cash, receivables and inventories. And such decision is influenced by trade-off between liquidity and your profitability. The reason is simple, is that more liquid the asset, the less it is likely to be yield, and more profitable an asset, the less liquid it is. So a short-term investment decision is one which ensure high profitability, proper liquidity and sound structural health of an organization, right? Next we have your financing decision. Once the firm has taken the investment decision and committed itself to a new investment, it must decide the best means of financing for these commitments. Since the firm is regularly make a new investment, the needs for financing and the financial decision are ongoing. Here, the financial manager is concerned with making up of a right hand side of the balance sheet, that is your liability side. So the financial decision are concerned with the capital structure decision of the firm, right? And the determination of the portion of the debt and equity or the optimum financing mix which maximize the shareholder wealth. Because raising of more debt involve fixed interest rate, right? That involves a fixed interest rate and dependence on the outsiders, and raising of the fund through this equity will bring the permanent fund to the business, but the shareholder will expect high rate of earnings, right? So the trade-off, the financial manager, so the trade-off between risk and return. So the financial manager has to strike a balance between or trade-off between risk and return through various sources so that the overall profitability of concern improves. Simply, if the capital structure is able to minimize the risk and raise the profitability, then the market value of the price of a share will go up and maximize the wealth of the shareholders. So this is all about your financing decision in which you decide the capital structure of the firm. Either you have to raise the funds through debt capital or the equity capital. Next we have your dividend decision, right? The third major financial decision related to the distribution of profit back to the investor who supply the capital to the firm. The dividend is the part of profit which is distributed among shareholders. So the dividend decision is concerned with the quantum of the profit to be distributed among shareholders, and the dividend decision is related to the appropriation of profit, that is, the financial manager has to decide how much profit is to be distributed as a dividend and how much is to be retained in the investment, retained for the investment in the business in the form of retained earning, right? Here, the financial manager should determine the optimum dividend policy which maximize the market value of a shares. So this is all about your financial decision, right? Investment decision, financing decision and the dividend decision. In dividend decision, the financial manager has simply decide how much you have to retain in the business and how much you have to distribute it as a part of profit, as a part of dividend, right? Next, we have your interrelationship among these financial decisions. These financial decisions are interrelated with each other. How? Let's see. While taking the investment decision, the financial manager has to decide the financial manager has to decide the type of assets or the project that should be selected, and the selection of a particular assets or a project help to determine the amount of funds required to finance the project or the assets. For example, suppose the investment on the fixed assets is rupees 10 crore and the investment in the current assets or the working capital is 4 crore. So the total fund required to finance the total assets is your 14 crore. Once you decide that the required finance of the total assets, the next decision is your financing decision. Either you have to raise these funds through long-term sources or through short-term sources. Long-term sources or through your short-term sources, right? Next we have your dividend decision. financing decision influenced by the dividend decision. How? Let's see. When we have decided the amount required to finance a project is 14 crore, if the finance manager planned to raise rupees 7 crore from outside and remaining from your internal sources, right? And if the dividend decision is 100% payout ratio, then the financial manager has to depend completely on the outside sources to raise the required fund, because you have to, the dividend decision is 100% payout ratio, so the whole amount is distributed as a profit. So the financial manager has to depend on the outside sources. So in this way, the dividend decision influences the financing decision. Here, this is the interrelationship between all three decisions, and all three decisions is concerned with the financial management, right? We can say that the financial management is concerned with the financial decision which analyze risk and return relationship to achieve the goal of a wealth maximization. So this is all about your financial decision. Thank you students. Thank you so much. And if you like my video, please do share and subscribe it. And don't forget to press the bell icon button. Thank you. Stay safe and keep learning.